Good afternoon, everyone. This is Trader Tim from eminimine.com. Today's November 17th, 2016, and I wanted to talk today about how you can utilize the 15-minute chart in conjunction with the 512 tick chart. So on my trading screen in front of you, left chart is a daily chart. The right chart is a 512 tick chart. Down here on the left, I have a NYSE tick chart. And I'm not going to get into the NYSE tick in this particular video. You can just Google NYSE tick over at Emini Mine to get more info on how I use that. And I'm really not going to be talking about the daily chart in this video either. But I like to start my day and start my week off by looking at the daily chart and gaining some context for where are we in relation to the daily chart. So for today's trade, we were at the top or near highs, all-time highs on the E-mini S&P. Oops. We are towards the top of a rally, or certainly not at the beginning of the rally. Whether or not this is the top and we roll over is irrelevant, but the context being that we are in a situation where we're near highs but approaching resistance. So getting that context on the daily chart is really helpful to give us an idea intraday what we can expect. When we open up and stay inside of the previous day's high and low, that's what we call an inside day, and those days can really be lacking of setups. When we open up, as we did today, inside the previous day, but then break out of that previous day's range, that's very important because that shows us that one of the parties, either the bulls or the bears, are in control. And when we are inside for multiple days, inside a high and low of a daily bar from earlier in the week or the previous week, those are days to really be cautious. But when we're breaking out of the previous day's high and low, those are days that we can really get involved heavily in the markets and expect a lot of follow through. So when I'm looking at a 512 tick chart, I will sometimes look at a 15-minute chart or a 5-minute chart, but you can a lot of times pick out the larger retracement setups right on the 512 tick chart. So let me show you what I mean. If I were to put on a 15-minute chart, I would be able to, so this is Thursday here, and this is earlier in the morning before the NYSE opened, and ends up being the low of the morning. So this trade over here is kind of the overnight session, and then this trade on the right side, trade price action, is the NYSE session. So right off the bat in the morning, as we go from overnight into trading hours only, we can pull from that low and draw to the highs of the morning right after the open. So now when I go back to my 512 tick chart, we can see that drawing on the chart. And I'm using Thinkorswim charts, but most platforms have the same capabilities that I'm using in this example. So now we've got our larger 15-minute setup on the morning. It was kind of a choppy run up this morning and then kind of a mixed pullback in that we had a lot of red bar, green bar, red bar, green bar on the Hakanashi 512 this morning. It wasn't super clean until a little bit later in the morning. So once we pull back to this 50% retracement at 2176.75s, now we're in position to look for a setup on the 512. So once we come and touch the long and start to reverse, moving higher, so we pulled back into the long setup. This is just a 50% retracement I have marked here, and the market starts to reverse. Well, I always like to draw the opposing setup. So if the long trades, I'll draw up the short just to give an idea of where the short setup would start if it were to trade. And in this case, the short was not very far above us. So there wasn't really an opportunity to get a small 512 that had good reward to risk ratio, meaning, sometimes you can draw very small lows to highs or highs to lows that give you a 50% retracement of maybe a point and a half. And so when we're using a 6-tick stop, I like the distance between my 50% retracement and the negative 23% target to be, closer to 3 points or more. So I drew the opposing short, and quickly we moved up into that short and then broke the 61% line. So the failure level of our retracements is the 61.8. So in doing so, that gives us the signal that we can then go ahead and take the next long setup because the bigger 15-minute level has traded. And while you can enter at the 15-minute itself as a limit order, if you notice the distance between the 50 and the 61.8, it's a little bit wide, meaning if we're going to use a 6-tick stop, I like that 6-tick stop to be outside of the 61.8. And a lot of times the 15-minute setups, since they're so big, the 61.8, if you were to enter at the 50, would be between the 50 and the 61.8. So it doesn't give you the greatest of entries because of that distance. So what I like to do on these larger 15-minute setups, go to the 512 tick chart, and as soon as the 15-minute setup trades, and in this case the opposing setup failed, I can draw from lows to highs and take that first 512 setup after the 15-minute. So the first 512 tick setup after the 15-minute trade is your highest reward to risk opportunity. And then once you're getting in the trade, then it's just a matter of riding it out to the negative 23% target and then proceeding to draw the next setup from lows to highs. In this case, we traded a little bit in terms of the market spiked down a little bit, but again, with the 6-tick stop, entering at the 50 keeps you in the trade, and you're able to ride that one out to the negative 23 and beyond. Now, I do have a couple strategies that I use for entering at the 512 and trailing my stop. A couple different ways to get in on the 512 tick chart, but use the target of the larger 15-minute. And I talk about those more over on the blog. So if you're interested in some more details on my specific strategy, you can head over to the blog, eminimind.com. I have a section for VIP members that we trade trade on Tuesdays in a live trading room format. So we talk about the markets each morning on Tuesdays in real time, go through the setups, answer questions. I've also got a ton of webinars and videos that I've done talking more about the methods that I use, the way I manage my positions, trailing my stop, entering, exiting positions, things that I'm looking for, more on the nicey tick and the market internals. And you can get all that over at eminimind.com/VIP. And for a short while, if you want to download my trading rules for the ES and the 6E. And these setups I will, work across all markets and all time frames, but I specifically like to look at and trade the Emini S&P and the Euro FX. Those are just two really good markets that tend to move very well, and the ranges are wide enough where you can get in and get out without getting chopped up. So those are the two markets that I talk a lot about on the blog. And if you want to download my trading rules, you can get a month's access to the live trading room and all of the webinars, videos, my trading spreadsheets, and all those things over at eminimind.com. If you have questions, shoot me an email. I'd be happy to chat more. Tim at eminimind.com. Thanks, everyone. Have a great weekend.